Today's web series happens to be hosted by the Mid-Eastern Athletic Conference. And my name is Lynn Thompson. I serve as the strategic advisor to the commissioner of the MEAC, Sonia Steels. And I'm so happy to be here with all of you to provide some information about budgeting, money management in today's global economy. And when we look in terms of how important that is, I want to just give you some information first about how important it is for me to represent the 8 great institutions that make up our wonderful conference called the Mid-Eastern Athletic Conference. Since 1971, the MEAC has been in existence. We kicked off our first year of college football in 1971. And who are we? Well, we're 8 phenomenal institutions. We call ourselves the Elite 8 institutions lined up across the eastern seaboard of the United States, the Atlantic coast. And you've heard of our institutions ranging from Howard University, South Carolina State, Delaware State, the University of Maryland Eastern Shore, Morgan State University, Norfolk State University, North Carolina Central, and of course the Bulldogs at South Carolina State. Those institutions do a wealth of great work, providing graduates who touch the lives of millions and millions of people in leadership in every phase of your lives and in every industry there could possibly be. And we're proud today to be a part of this exciting program. This session will be recorded because we're going to share so much information for you and with you that you're going to have no choice but to go back and get a remix of this. Some great tidbits that you can use to make sure that your life is much better. And to help me today, we're going to have Sheena Dean from the MEAC staff. She's going to be co-piloting this ship with us. And I'm going to toss this thing in just a second to a good friend of mine. Normally, I would be in Norfolk, Virginia at our headquarters. We are producing this event at the MEAC Digital Network. But before we do that, let's talk about what we do from the MEAC. We are one of 2 Division I institutions in the NCAA. That means we compete at the highest levels of college intercollegiate athletics, and we sponsor 14 championship sports. We compete, as you've heard of, the Celebration Bowl, sponsored by cricket. We're 6-2 over the SWAC conference. Those are our rivals. We love them, but we love to beat on them also. And we just hosted our very first esports championship. If you are a gamer, you need to get involved in this kind of stuff. And we're going to be hosting another one this coming March in Norfolk in conjunction with our college basketball tournament. The MEAC tournament is a hot thing and a hot commodity, and you need to follow that and be in the house when we take over Norfolk in a month or 2. But now we're going to let this man take over the show. And normally I am in the chair in the MEAC Digital Network in Norfolk, but right now, Dewey Norwood from Wells Fargo happens to be sitting in my seat. Dewey, how does it feel to be in that great studio? And we're going to toss this thing right over to you now to take us for the rest of the way.
I'll tell you what, Lynn Thompson, ladies and gentlemen, let's give it up for Lynn, first of all. You come on the screen again. Lynn is like your walking music. He's your walk-up song wherever you go around things. And Doc, we're so glad that you're able to join us. Thank you for allowing me to sit in this coveted seat and to be a part of this amazing broadcast. And Lynn, here's what's special about today. This kicks off our 10-year anniversary for our Beyond College webinar series. So we've had these up and going for 10 years, and can't think of a better partner to work with to kick off year 10 than our great friends in the Mid-Eastern Athletic Conference. So we're excited about what we'll cover off on today. And Lynn, we got a whole lot to do between now and November with our different topics and things. So we appreciate you being on, and we're going to bring you back on the broadcast with Sheena in a little bit when we get to the Q&A portion of things. So, ladies and gentlemen, again, that's Lynn Thompson, best in the biz. This other guy on the screen, I mean, you guys know about him already. Some of you guys, first-time joiners. If you're first-time joiner, go ahead and drop a comment in the chat. Maybe drop in where you're joining us from today. But for wherever you are, just thanks for taking time to be on. Dewey Norwood, now 25 years and counting in the financial services industry, and fortunate to be leading work around our corporate HBCU strategy, and also very excited about the work that our institution is pioneering. Partnership with Mighty 98, I think as we called it earlier. We're on LinkedIn for broader kinds of conversations in those kinds of areas. If you think from a last, look at kind of the assets under management perspective. We have over $1.9 trillion in assets. And you'll see that information there on the screen, 1.9 trillion in assets. And so those are investments all around the U.S. Great house relationship with our institutions. So really there. You can visit us online at wellsfargo.com, and of course jump out to our LinkedIn page to be able to learn additional pieces from that side. So good stuff there. Hey, I think our next slide actually talks a little bit about some of our strategic investments. And so if you look at the last 12 years, Wells Fargo has provided 119 financial support across the higher education landscape. If you disaggregate that data, now over $40 million of strategic investments in HBCUs and organizations that support HBCUs. So significant investments there. Those are scholarships, programming, a lot of great things that we're doing to support the amazing students on HBCU campuses. So a little bit of a snapshot there around some of our strategic investments across our institution. Hey, as we pivot, I've got a really great document that we'll share with you here. Wells Fargo's efforts to promote racial equity. I would encourage everyone that's watching today's broadcast or watching the replay of this, visit that website that you see listed down on the bottom. This will actually take you out to a PDF of this document, and you can actually read and see some of the impactful work that our firm has been doing, again, to promote racial equity and some of our efforts institutionally. Really great document, so I would encourage you to check that out when you have a brief moment. All right, with that said, we've got something else that we're going to spotlight here. And this actually goes back a little bit in time for us. In April of 2022, our firm launched what I consider a groundbreaking type of a product line with the launch of our HBCU Legends debit cards. These are debit cards. We're going to talk about debit cards later in the broadcast, but these are debit cards that are available for any of our retail banking customers. Today, we have over 40 different HBCU Legends debit cards that are available. So you can connect in with these. If you're a banking customer of ours, you can customize your banking experience, as we like to say, and be able to take full advantage of these amazing cards that we have. So again, over 40 that are in existence today. And Lynn, Sheena, folks that are watching, I've got one of my favorite cards here, and I think it's on our next slide. And this is our amazing card that we have for the MEAC. So you'll see that on the screen. And in addition, I brought a prop just in case that one on the screen for you. This is the life-size version. This is the one that you take to the fast food restaurant when you eat. This is the one that you take to your favorite retail store when you're ready to go ahead and make a purchase. So the example here, we love this great card. This is available free of charge for any of our retail banking customers. You can come and customize your banking experience and grab that MEAC card. Step in, Lynn, step in to the MEAC. We love that. We love that. All right, with that said, speaking of stepping in, we're going to jump over now and bring on some trusted partners of ours. Really excited that we have with us today Sylvia Jones and Casey Galindo. These are amazing partners of ours that do a lot of amazing work to help students along their higher education journey, but also their financial journey in given areas. So Sylvia, Casey, so glad to have you all on the lines with us for today. Sylvia, and everybody make sure, jump on, make sure you connect with Sylvia and Casey via LinkedIn and continue to stay connected to them. So Sylvia, want to let you take a moment to kind of introduce yourself, and then we'll give it to Casey, and then we're going to jump in on this content. We got a lot of good questions that we'll be sharing. So ladies and gentlemen, let's give it to Sylvia Jones for her introduction this time.
Well, thank you, Dewey, and good afternoon, everyone. We are so excited to be here with you today, and welcome and thank you to the MEAC for sponsoring us. But we are excited to be here. We're going to talk to you a little bit today about, budgeting and saving in this economy. Of course, my name is Sylvia Jones. I'm a campus program manager with Wells Fargo. I've been with Wells Fargo for about 13 years. And I actually work with colleges and universities in the Southeast. So really excited to be with you. And I'll turn it over to my colleague, Casey.
Thank you, Sylvia. And again, just as Sylvia mentioned, very excited to be able to work with the MEAC team. Dewey, I couldn't believe it when you said it. We've been working together now for 10 years. I know we've been doing this with you. So very excited to be here again today to talk about budgeting and savings. I am also a campus program manager, and I'm actually joining you all today from the Lone Star State here in Texas. So I work with colleges and universities throughout Texas as well as New Mexico. Back over to you, Dewey.
Love it. So team, action item 1, you got to jump out on LinkedIn, get connected to Sylvia Jones, get connected into Casey Galindo. We have this running contest. Get more followers in, right? They always get more people to come in. One day, Sylvia, I'm gonna win. One day, I'm gonna win that somehow, some way. But get connected with them, and we'll continue the conversations in those kinds of areas. Hey, listen, team, we're going to go ahead and jump in with both feet here. We've got a handful of questions that we're and I want to get this is a safe space. Scholars, if you all have questions that are top of mind for you, go ahead and reply back to the email that you got inviting to this broadcast and submit those questions to us. We're never going to read your name out on the broadcast. We're never going to say, hey, this question came from Angie, this question came from Tom. We're not going to do that. I guarantee you, if there's a question that's on your campus, maybe with you at your same school, it could be across the country that has the same question. So let's know that we have this as a safe space around dialogue. So along those lines, Sylvia, Casey, I have a question here, and this one is a really direct one. If you can, talk about a financial challenge that you experienced either in college or earlier in your career. And if you can, touch on how you actually were able to overcome that challenge. And Casey, if it's okay, let's start with you on this one. Again, a financial challenge that you...
Absolutely, Dewey. So I'll start off and I will say the one thing that was a challenge when I first started college, when I think back to that, was budgeting. And my first experience was that with that was early on. It was, I had pledged a sorority, and there was a semester early on where I couldn't pay my sorority dues. And what I winded up doing was I took out a student loan to pay for it. And it all came down to, I didn't ask anyone for help. You know, I didn't go to my parents at the time because I knew, you know, they would tell me, well, that's not necessarily a necessity while you're there in school. And they probably would have recommended that I, you know, go ahead and drop. And I never talked to anyone within the sorority to see were there options that I had to, you know, set up a payment plan. And really a lot of it just came down to I didn't have a budget in place, and I really hadn't set those, if you will, financial basics of learning how to manage my money. And that was really my first experience early on in college that I had to learn to overcome and learn the hard way. Because again, I took out a student loan as a result of that, not asking for help, not learning how to better manage my money. And so that was a learning. And from there on out, you know, got the help that I needed, put that budget in place, and was able to better manage my funds.
So for me, I'll go ahead and kick in my answer here. I kind of did the opposite of Casey, but you know, when you think about college, just managing day to day, right? Once the tuition is paid, the room and board's paid, you know, you have to figure out, how do I manage the day to day? And so that's the first challenge, really, when you think about budgeting. And one of the major challenges that I had personally was it came my senior year, because I really always kind of watch what I do, spend, you know, less than what I have and all of that. But my senior year, I was short, right? I knew that I did not have enough to get me through that year, and it was my final year. So what I did was I went to the financial aid office. I told them my story. Unfortunately, they didn't have anything to give me grant-wise, but they did tell me to look at a federal student loan. So I went down that path. The other thing I did was I talked to the multicultural office and just really trying to find what resources were available to me, help me with this budgeting process. And so what I ended up doing, I ended up getting a part-time job. So I had to work during the school year. And normally I just worked in the summer and saved. So I had to do that. I did take out a student loan. And I had a lot of credits because it was my senior year and I was trying to graduate. So, but the good thing about that, remember, I asked questions, right? After about a month or two, I got a phone call from the multicultural office and they said, hey, we have a scholarship for you. Someone is withdrawing from the institution. And so we want to give that to you. And so the gist here is just make sure that you all ask questions, make sure that you figure out what resources that are available to you on campus, because that helped me out in the long run. And it allowed me to stay in school. It allowed me to pay that bill that I had that I was stressing about. And it gave me more connections with the university.
Hey, Sylvia, if I could add just something to what you were saying, if you don't mind.
Sure.
I think that budgeting aspect which is a huge piece that you were talking about. And one of the things, you know, in hindsight, learned the hard way, of course, but really having that budget in place. So if you haven't set up a budget, or maybe it's been a while that you visited your budget, one of the things that I think even carries over now at this point in life is making sure you really understand, you know, what are those monthly expenses that you have. Really understanding what your cash flow is can help sometimes manage that stress, because you'll understand what income you have coming in on that monthly basis, whether it's work study or a job that you have or a refund as a result of financial aid, and really understanding where you're spending your money as well.
Hey, ladies, some really great topics there and some good solutions that I think will be really, really helpful for our audience. So thanks for touching on those for us. We're going to jump over to our next question here. And this one is, again, lifelong adage, right? Save money, pay money. Okay. How do you balance through the importance of saving, paying yourself first, and at the same time making sure that you're eliminating any debt that you may have out there in given areas? So, Casey, again, I think we'll stick with you for starters on this one. Saving money and paying off debt. How do you do it?
So, you know, one of the things I think is interesting nowadays, Dewey, when we think about, you know, how much is on social media and, you know, how much of a presence we often, you know, have looking at different platforms. One of the things I would say, especially when it comes to debt, is really not to get influenced by the influencers. And by that, what I mean is it's amazing when, like, you're on Instagram or you're on YouTube and you look at all these individuals out there, whether they're super young or older, or at whatever point they are. And, you know, when they start, you know, showing nice things that they have, or places that they're going, or activities that they're doing, they make it look so easy. And I think a huge thing nowadays with debt especially is not to get influenced by influencers, because I know when you go to those sites, or you go to a particular maybe product, sometimes you'll see where they offer payment plans for it, and it just seems so easy nowadays to somewhat get influenced to maybe have more items and experiences, and maybe put that saving money on the back burner, if you will. So I think it's, you know, kind of pausing and taking a break and really thinking about, you know, where you want to go. And one of the things I find even now when you see these great experiences is gosh, I want to do that, but to make sure you don't get influenced by the influencers, because I think that would be a sure way to kind of get that debt, if you will, versus that savings.
And so I'll add a little bit to what Casey is saying, which is really just spot on, is that when you think about balancing your savings and then paying off debt, I mean, I remember being in this situation. It's like there's so many things coming at you at once, right? And you're trying to do the right thing. One of the things that you really want to focus on is, first of all, if you're trying to decide between savings and paying off debt, that means that you've paid all of those other bills that are actually due, right? So you've paid those living expenses and now you may have a little bit of extra. What do I do with that? One of the things that you really should consider is if you do have debt, okay, what is the interest rate that you're paying on that debt. All right. That's one thing. The other component, okay, savings, you have savings. What is the interest rate that you're earning on the savings? And then you look at that and see, okay, if the amount of debt that you have, the interest rate that you're paying is say 18%, but the savings that you have is say 2%, you really are paying more than what you're earning. So what you want to do is make sure that you're putting as much as you can towards that debt so that you can get rid of that. Now, you always want to have a little cushion, right? So what I would say as a college student, maybe just have a couple of $100 saved up in an account. And if you have credit card debt, making sure that you're paying that down, right? Because that interest rate is going to be high. So those are some of the things that you should really think about. And one of the other things, when it comes to savings, I always say make it automatic, right? And so if you have a job and that money, you want to make sure that it's directly deposited into your account, and then have it automatically go into a savings account. So make your savings automatic. That way, out of sight, out of mind. And then, over time, that savings will build up. And so those are some of the things that I would say that you really need to think about when it comes to paying off debt versus, saving money.
Yeah. Sylvia, Casey, some great information there on both of those fronts with things. Our next question is really sticking with one of the same things. I think both of you all kind of briefly touched in some way, shape, or form around cards, right? And so we got to touch on debit card, credit card. First of all, and Sylvia, we're going to start with you on this one. Explain the difference between the debit and the credit. We've got high schoolers on today. We may do the roll call if we have time later. We've got a number of institutions that are connected. We have high schoolers on with us today. Maybe they don't know the difference. Break down debit versus credit card. And then how do you successfully, how do you successfully manage the use of both? Because there is a difference.
That's right. And so, so what I'll start by saying is that amazing MEAC card that you see there, that is a debit card, right? That's a
visual.
And so a debit card.
That's not like.
There you go. That's a debit card. So what that means is that is money that you have in your account. Okay. So it's not any extra that's sitting there that you can draw from that you currently say don't have, or it's not a loan. A debit card is your money. Okay. Like back in the old days, we would be writing a check, and whatever was in our account, that's what we could use. Okay. So that's what a debit card is. So you want to be careful with that. And in using a debit card, you want to make sure that, back to Casey's point, you have to budget, right? Because that debit card gets swiped. The minute it gets swiped, that money comes out directly. Okay. So when it's swiped, that's however much you spent, that's how much less you have in that account. So that's what a debit card is. It's your money. It's a convenient way card, that MEAC card that you can use to access your funds, okay, electronically wherever you are. And you can go to the ATM and take out cash, right? But that's what a debit card is. It's your actual money in your account. Now, a credit card is different, okay? That's not what your MEAC card is. A credit card is a card that when you have to apply for it, you either get approved or denied. And if you get approved for a credit card, then they're going to give you what's called a credit limit. The credit limit is the amount of funds that you actually have that you can use to spend. So for example, maybe you apply for a credit card, you get approved, you are allowed, say, or approved for your credit limit is $1,000. That means that you can use that card, swipe it. Money that you use on the card will kind of add up over time, and then each statement you're going to get a bill for that, right? So it's a loan really that you have to pay back, and it does have an interest rate attached to it, and typically that interest rate can be in double digits, meaning that it could be 15%, 18%. They will let you know what the interest rate is once you apply and get approved. And so you want to make sure with credit cards, you pay on time every single time, And we recommend that you only put on that credit card what you can afford to pay at the end of the month. Okay, you definitely need to make sure that you're paying at least the minimum. But if you don't pay the full amount, then what they charge is interest. That interest rate that they said that you have to pay based on the amount that they approve, that's what you're going to be paying. So, for example, let's say if you put $20, you charge $20, you get a bill. It's not just going to be for that $20 if you don't pay it in full. It's going to be $20 plus interest. Okay. So that's the difference between a debit card and a credit card. One is your money that you have. The other is really an amount that's set aside, a loan with an interest that you have to pay off each month or pay the minimum that's due. Now I'll throw it back over to Casey to share some more.
Thanks, Sylvia. One of the ways that I think, or one of the things that I would encourage individuals, because it is something that I do myself, is being very aware of where you're storing your debit card, credit card information. And when we think about all of the access that we have online right now, it's very easy to store either one of the credit card or debit card information on an Amazon site or on Starbucks to link one of those cards to your account. Or if you actually like to purchase music and not just have a subscription, storing, a credit card or debit card on iTunes. So be very careful because things can add up really quickly when you put that information out there. A quick click when you're purchasing a coffee or purchasing a song or something on Amazon, it can add up very quickly. If it's a debit card, like Sylvia mentioned, that's money that's coming directly out of your account. So be careful and really, keep track of where you are putting your information and where you're making these purchases. Another good thing that you can do to help manage and know what's taking place with either your debit or credit card is to set up alerts on those accounts. So every time you swipe a debit card or swipe your credit card, you'll get an alert for that purchase. And that can do a couple of things. It can make you more aware of what you're buying and how many times you're making purchases, but it's also going to be a good measure to make sure from an identity theft purpose, exactly what's taking place with your account. So again, be really careful where you're storing your card because it's so easy to put your information out there on different sites and make purchases all the time. So being aware of, how much you are purchasing, what you're buying, and a good way to do that is setting up alerts on your accounts as well.
Dewey, I have one more thing that I need to add, and it's a tip for you guys, and that is, for those of you college students that already have a credit card, and like we said, you want to make sure that you're careful with it, use it wisely. When it comes to your credit card, the reason I say you want to pay on time every single time is because if you miss a payment and you're not paying on time, you're going to negatively impact your credit score. And we won't get into credit scores, but the higher the better, right? And your payment history, meaning paying on time every time, makes up the largest percent of your credit score, which is 30%. So when you're not paying on time every time, your credit score can go down pretty quickly. So remember, 30% of that credit score, makes up that credit score is that payment history, you paying on time every single time. So back to you, Dewey.
No, listen, I love what you all are suggesting there, and I'll add a quick tip from my side. If you're utilizing the online banking system with Wells Fargo through the app, you have the ability to turn on and off your debit card, which is a really, really convenient feature. Because if you know it's not something you're going to be using, you can turn it off, or you misplace it. There's even a commercial that we have right now where young lady lose her card for a moment, then all of a sudden finds it. And so she turns off the card and turns it back on. So another kind of check and balance that you can have there. Really, really good information, team, to understand the difference again between debit and credit cards. Very, very important. Very, very important. All right. For our next question, everybody that's out there, I want you to think of your that one here. I want you to think of your kind of best, one of your best friends, someone that's a close friend of yours in some way, shape, or form. when you talk to them about the student debt that you have right now, or the loans that you've had to take out along your college journey, I'd be interested in the conversations that you'd have with folks in those kinds of areas. But to add on to that, Casey, Sylvia, talk about something that you all either applied in your life to share to help them go through that student debt payment process. Can you give us an example of something there? I mean, what have you all learned about paying off student debt successfully?
I have learned the importance of paying on time every time. So when I bought my first vehicle out of college after the car I previously had died, I wasn't sure whether or not I was going to qualify on my own because I did have a good amount of student loan debt. And so I was really nervous when I went to purchase the vehicle, thought maybe I was going to have to ask my parents to co-sign on the loan. And going through the process, one of the things that I had learned the importance of, and it showed up, is I was able to qualify for that vehicle on my own. And that finance individual that was helping me said, even though I had a lot of debt, the fact that I had paid my student loans on time every time was pretty much, how I was able to do it. So I would say that's going to be the most important thing. And I do realize things in life happen. And if you were to experience any sort of challenges or run into situations where maybe your current payment plan is not working for you, it's going to be so important to reach out to your loan servicer and have a conversation to let them know what's going on with you, because there are so many options that are available to student loan borrowers nowadays that can help them through difficult times.
Absolutely.
Love it.
And what I would share when it comes to paying off student loans, initially, you have that 6-month grace period, right? And I say during that 6-month grace period, before you go into student loan repayment officially, sit down, figure out how much, that loan is going to be each month. And then what I would do is kind of start setting aside that money, right? So let's just say if it were going to be $200 a month or $300 a month, during that 6-month time period, as you're just living life, you just started this new job out of college, that's that 6-month time frame that you have to figure it all out, right? So how much is that student loan payment going to be? Okay, I'm going to pretend like I'm making that payment with the expenses that I currently have. So start setting that aside and don't touch it as you are budgeting and just trying to figure out your day-to-day life over the next 6 months before you start making that payment. And then if things are going really well, before that 6-month period hits, go ahead and make a payment on that, because anything that you make a payment on prior to the 6-month grace period ending, especially if you have a subsidized student loan, that's money that you can lower so that you're not paying interest on that money once you go into official repayment. So the basically you want to try to make sure that you put a budget in place, and we're going to keep saying that budget word, right? But put a budget into place. Make sure you're understanding how much money is coming in, how much is going out, what do I have at the end, and how much can I apply towards a student loan, right? Because let's say month 3, before month 6 hits, you can say, if you see that you're about $50 short, then you're going to have to look at your budget again and see, okay, where can I come up with that difference, right? Because there's typically, when you kind of look at your expenses and the needs versus a want, then you might have to, do a little budgeting and not spend so much on going out to dinner or whatever the case may be. That's why you have to really look at your budget, see where your money is, because if your money is not working for you, then it's working for someone else, right? That means that you're overspending somewhere, someone else is enjoying the benefits of your money, and you're really not. So you have to make sure that you put things in place. That's what that 6-month grace period is there for you, is to make sure that you're ready to go once the 6-month hits. And a great website for you guys to take a look at, you can find who your servicer is for your student loan. You can look at how to, public loan forgiveness, what that program is about. all the different types of repayment plans. That is studentaid.gov. Check it out. You can go online there, studentaid.gov, create an account, and it's going to pull in all of your information that you have on student loans, and even if you got grants. That's the same site that you'll see where you probably applied for the federal student aid or FAFSA. It's that same site, but there's a lot of great information out there. I encourage you guys to go out there, check it out, but you always have to have a plan.
And Sylvia, I'll just
Listen.
add real quickly to what you were adding. If you do have student loans, something that can really help with seeing where you are in the process, what those payments look like, is you're going to find that your loan servicers will often offer you an opportunity to sign up for their online portal. And that's a really great option because it'll help you to stay on top of your loans, to see what that interest rate is, to see what the payments look like, to kind of see the progress and just know what's going on. So that is something that you might want to consider taking advantage of. And also, if you are ever in a situation where maybe you want to send in a little bit more money because you received a refund from your tax return or something like that, and you wanted to pay more towards your student loans, you definitely, if you're going to do that, you want to follow up with your loan servicer and tell them exactly how you want that additional amount of money applied to your student loans. So that would be something else you want to consider doing.
Listen, you all have given our attendees a PhD in the things they need to be thinking about when it comes to student loans. And so I really appreciate that. Really, really appreciate it. Listen, a couple of items here. I'm keeping an eye on the clock. We are getting close to our Q&A off, next 7 to 10 minutes. To ask folks to do us a favor, though. Our chat feature, we're not actually going to take any comments directly from there. But please use the Q&A feature to submit your questions. I've seen them coming in already, but I know some of you all wanted to use the chat piece, but instead, please, for today's broadcast, let's use that Q&A feature. Submit your questions there. And again, remember our rule. We're not going to read your name out on the broadcast. We're not going to do that. But if you've got a question, there's probably someone else that has a similar question in those same areas. So let's continue to fill that box so that when Lynn and Sheena come on in a couple of minutes, we'll have lots of items. And I see more and more items that we're adding in. So this is good. All right, Casey, Sylvia, deep breath. We're going to stay with this family theme. I think our next question is another one that's pretty interesting on this side. And again, as you're thinking about other things that maybe you learned from a family member or something that you passed along to others that you thought was beneficial, is there something else that students really should be considering that can help them along their financial journey? Give them maybe 1 or 2 tips that you can apply. Our broadcast ends in 5 hours. In 5 hours, when our broadcast ends in 5 hours, what's a tip that they can take away, boom, and immediately apply to their lives? I see Sylvia laughing, so maybe we'll pick on her first.
All right, so a quick tip, and I'll be quick with this one because I really want to hear what are some of the questions that you all have. So a quick tip really is you have to have a plan, right? And you have to know what's coming in, what's going out, and what do I do with the difference. So what I would say, as the sun is just beaming in right now on me, but what I would say is that take advantage of whatever tools that your bank, credit union, financial institution has to offer. So for example, here at Wells Fargo, we have what's called My Money Map. You can take a look at, we have what's called a spending report. So you can look at where your money is going. We have a budget watch where you can track all of that spending and then put little monthly information on there as far as budgeting of what you're trying to accomplish. And then we also have a savings plan part of that. And so look and see what your institution has to offer. Quick story, my daughter used this particular plan because I told her I wasn't sending her any more money. She was also in college at the time. And so she did this exercise because I was done until I saw where her money was going. And her top 3 things, she had things at Jittery Joe's, DoorDash, and Chick-fil-A. So that's where her money was going. So she actually did a 360. She started investing some of her money instead of just spending it and not really understanding where it was going. So you have to know where your money is going if you're going to do something different. Casey?
Yeah, the one thing I would I think it's a great thing for you to start thinking about as students is think about what kind of goals you'd like to set for yourself. So, for example, if that is to start an emergency savings account or to even start putting money aside into a savings account, whatever it is, start thinking about setting those goals now, because it is something that you will do throughout your life. And when you do set your goals, think about applying what is often called a SMART methodology. So by that, it's being very specific about that goal, making sure that goal is measurable, that's achievable, that it's relevant to you, and that there's a time factor that's associated with it. And that can definitely help you along your financial journey. Again, you'll have goals now that are going to be very different to goals that you have for yourself after college. So thinking in that perspective of starting to set financial goals is something that could definitely help along your journey.
We love it. So there's some actionable tips. I like the SMART approach there, Casey, for things that we need to be thinking about. Really, really good suggestion there. All right, I think that we may be down to our last question, if I'm not mistaken. We'll bring these up here. And again, I'm keeping this family theme in place on purpose. And I think our last one, and maybe get kind of a closing thought before we jump into Q&A on things. And again, I want everybody to think about your best friend. Think about a family member that's close to you. Sylvia, Casey, share a lesson or a financial journey that you learned from someone in your family. And don't go naming people. Let's be clear on that. We're not calling any names out. But we want you to talk about something. Hey, I learned this from this person and it benefited me. Or I saw a person doing this and I kind of went in the opposite direction. We can learn from our friends and family, right, Casey?
Yes, we do. And actually, Dewey, when I was listening to you, I have to think back to when I was in college and my best friends specifically. One of the things I will say is pause and think about purchases before you make them. It's so easy to influence each other, especially your close friends, to say, that's great, purchase it. Yep, homecoming weekend is coming up. Let's go shopping for new outfits or get your nails done. But you also want to make sure that you're not a bad influence on them. So really encourage each other to be smart about spending, about savings, and not to necessarily influence each other in the negative way, but pause and think about purchases, because you also want to keep in mind what are some of those goals you have for yourself, whether it's saving more money or paying off debt.
Pause before you buy. Pause before you purchase. I like that one. I like that one. Sylvia, same thing. Yeah, I'm gonna make you call out. Who told you to do or not do? No, I'm just kidding.
So, well, when you were talking to me and wanted me, I said, no, I'm not going to do it. So, but you want to, when you think about it, family and friends, family can have a big impact on how you think about money and how you are, how you really handle it. And so I would say this, you have to look at the people around you, surround yourself with people that are a good financial influence on you. And then to Casey's point, you be a good financial influence on someone else, because if it's a bad idea or it's someone is causing you to overspend when you hang out with them, then hang out with somebody else, right? If you are going out constantly and you have a meal plan, you're not making your money work for you, right? So you have to make smart decisions and you have to listen to people that you believe are making. And so like I said, you just have to make smart decisions. And the last thing that I'll say to this is, there's a lot of things out there on social media about finances. Don't get into something that you don't understand. If you don't understand it, then don't get into it. A great financial advisor said that. And so you do want to make sure that whatever it is, you understand what you're doing and you're making smart decisions. So I'll flip it back over to you, Dewey.
All right. So friends and family can work to our benefit. They can help us along our journey and maybe hold us accountable. in some given
Absolutely.
areas, maybe for things that we're doing well or places where we're kind of overcoming some challenges. So, all right. Sheena, Lynn, I know we've got one final question here, and so we're going to be coming to you all with the Q&A. The Q&A is heating up. I see them coming in. So, Casey, Sylvia, I want us to touch on one final item here. And this was just very brief, really simple. What's the most meaningful decision you made impacted your financial? We'll start with on this one, please.
Well, I'll jump in. And so, what I'll say just quickly is honestly, the most meaning financial decision that I made that impacted my financial journey is right out of college. I started with this insurance company, and I learned so much about buying property, selling property in a good way, and only buying what you could afford to pay. And so I bought my first home at 22, and we know that home ownership is a great wealth builder. And so I bought my first home at 22, and then it just allowed me to really understand a lot about finances, about home ownership, about property, and that really kind of started me on a good financial positive trajectory as far as my financial journey. So that would be my advice.
And I would say one of the meaningful decisions that I made was right after college, when I got my first job, was putting away into retirement and taking advantage of that early on from the beginning. I will attribute a lot of that to my parents, who really encouraged me to do that. They always had that mentality, learn from our mistakes. That wasn't something they did. And so that was something that they definitely instilled and made sure that I did and knew the importance of. I'm very grateful to that. But I would say putting away into retirement and taking advantage of any benefits that may come from that, for example, like an employer match. Back to you, Dewey.
Good old 401ks. Good old 401ks, Casey. Thank you, Sylvia, and pay yourself first. Pay yourself first. You cannot go wrong with looking out for the person that's number one, so to speak. So pay yourself first. All right. So, Lynn, Sheena, we've touched on a lot of stuff already. I'm going to take a little bit of a breeze here now and hand the reins over to you all to kind of hear some of the questions that are out there. And again, scholars, please, the Q&A feature is open for business. We'll cover off as many of these as we can between now and the end of our broadcast, but keep submitting those questions. So, Sheena, Lynn, some important items here. I see the box filling in. Yes. Sheena, maybe we'll start with you, or Lynn, if you want to jump in with a comment or a thought around something that you've heard, we can go in either of those directions. So we'll let you all take it over from here.
Please before I turn it over to Sheena, I just wish I had this resource when I was in school, and I'm sure Sylvia and you, Casey, you feel the same way. But I'm just so fortunate and blessed to be able to sit on this panel today. And as I see all the pre-submitted questions that were sent to us, and now the Q&A piling up, we're going to just rely on Sheena to navigate us through this. We've got some other questions that came in, and maybe we hope we'll get a chance to dive into those. But as these questions come in, and they're in your Sylvia, Casey, let's dive in and answer them. And Dewey, I know you're sitting there trying to take a break, but if it's something that you know that your expertise can certainly make the way for them, we're gonna just say jump right on in. Okay, Sheena, you got it.
All right. So one of the questions is, if the interest rate on your debt is higher than your savings, is it the priority to pay the debt or to worry about the interest rate? Higher than your savings, is it a priority to go ahead and get your debt taken care of, or go ahead and start saving?
So I'll jump in real quick. And what I would say is that, remember when we talked about looking at the interest rate that you're paying on any type of debt that you have, and compare that to the savings interest rate that you're earning. And unfortunately, a lot of times the debt interest rate is higher. So especially if it's a credit card, you want to pay that down, pay that off, focus on paying that. You want to have a little bit in savings, just in case an emergency comes up, you have a little bit in savings, but I would say absolutely focus on paying down any high interest debt that you have, because you're really not making any money necessarily if you're paying 18% on a credit card or whatever type of loan that you have, and you're earning 2% on a savings account. So knock that out, so that the debt out, so that you can earn some money on whatever savings that you have. Anything to add to that, Casey?
No, I think you hit on something that's key, Sylvia. The emergency account. So if you don't have one, something you might want to consider is starting an emergency account, because that gives you the ability to be able, should something come up, to be able to pay for it versus taking on even more debt to do that. So when Sylvia mentioned, putting money aside, I think that's something that can definitely help with that. Is also, you'll have that cushion, if you will. So if something comes up, you're not having to put it on a credit card or take on more debt to pay for it.
All right, another question is, how do you start investing as a college student? I know, especially for me, recently graduating college, how do you able to, get that initiative, say, I'm going to start saving? What kind of tips do you use, or things you should start doing now as a college student to start saving?
And I can jump in here, Sheena, and I think that's a really great question. And it's great to see so many college students nowadays thinking about investing and thinking about that future early on. I would encourage you, one of the things that I would encourage you to do is to schedule an appointment with a banker and really have that conversation around what your goals are, what it is you'd like to do, because there's a lot of resources and tools out there that you can actually take advantage of that can help with, say, starting out investing. And so that's a great way to learn about that and know what your options are. So definitely would encourage you to schedule an appointment with the banker, have that conversation, and see what is available and what makes sense based on where you are right now. Sylvia, is there anything you would add?
And so I would say, let's use Sheena as an example. So what you want to do, like Casey said, you really want to sit down with a banker, because what we want to do is look at your entire financial picture, right? What are you doing here with savings? What's your debt look like? What's your income look like? And so you want to sit down with someone so that they can look at that entire picture for you and guide you in the right direction. And I would say, do that sooner than later, instead of kind of bumping along, trying to figure it out on your own. Just sit down and have a conversation. You really don't have to do anything necessarily right off the bat. But if you do sit down with someone and have a conversation, at least you'll have some good information right up front. And then you make the decision onto what you want to do moving forward.
That worked right into our next question is, what tools would you recommend in regards to creating a budget? I know there's a lot of websites on now, or just doing pen and paper. What tools to best use when it comes to making a budget and actually seeing your finances, your expenses, and what you're making?
That's a great question, Sheena. And I'll jump in, Sylvia, if you don't mind, really quickly. I would say something that Sylvia mentioned earlier on when we were having our discussion. She talked about tools and resources. And actually, for example, Wells Fargo, we have what's called My Money Map. And so what's really great about it is it's providing you real-time information, because it's based on the information, transactions you make, what's in your account, your spending habits. So as you're starting out and building a budget, there are some really great tools that can help you do that, based on, for example, what we have available for customers. So that's something, check with your financial institution, see what you have available that can help you, because they can use information that's already at their fingertips about your account to help you build that. Sylvia, would you add anything there?
I would just say, absolutely what Casey says, and just look at all of the things that you have. Like, say, if you have the debit card, most likely if you go to whatever institutions that's offering you that debit card, there's going to be some type of summary where you can look at what your expenses are, like the MEAC card, right? So, get and if MEAC, it's Wells Fargo, so we're going to have all that information calculated there for you. So honestly, back in the day, a long, long time ago, when I was in school, I'm like with my little spreadsheet, my pencil and paper. Now, everything really, a lot of it's online. If you have a credit card, I can go even right now, pull up my credit card. It's broken down into all the expenses that I had the last few years, the last month. It categorizes them as to, where I'm spending my money. And then that way, if Casey comes to me and says, "Hey, can I borrow $2,000?" First I'll say, "Let me look at your account." But I can look at that spending report and see, I have a lot going on in entertainment. That's something I can lower, right? That's something that I can make an adjustment on, because that's just a choice. That's not a necessity. So just make sure that you're using the tools that are already out there for you, instead of going to find other ones, because there's already a lot out there for you, depending on the type of debit card or credit card that you have. A lot of that's just there. You just need to look at it.
Well, Sylvia, when I need $2,000, I know you borrowing from Casey, but Casey can't borrow, but I think I can.
I help you out, Sheena.
Raise your hand if you need $2,000.
Right, look, right.
There's hands all over the room, Sylvia Jones, all over the room.
Right. I got you.
Sylvia has it. She said she got us. Look.
Right?
But you heard what she said. She said she's going to check your account first.
Right.
Not a bad principle. You want to make sure it's a sound investment, right?
That's right. I have to see how you're using your money, and I can tell you, nope, you don't need to do that, and that. Then you'll have $2,000.
Right. When we're talking as college students, when we're talking about building our wealth, we're thinking about these good paying jobs that we're going to get right after college. What type of accounts should we start, thinking about opening now, or when we get out of college? What type of account can we start investing or opening so we can be able to build that wealth starting now?
Casey and I are always going to go back to sit down with your financial institution, just to see what's really going on. Because, guys, what you don't want is just a lot of random advice. Okay, you really want to sit down with the professional, and typically, if you just go to your banker, that's not going to cost you. If you're just starting your career, talk to your human resources department. See what's free first, right? And we talked about asking family and friends. Now, if it's good, solid advice, that's fine. But like I said, you just don't want a lot of random things that you're listening to. You want to sit down with the professional, especially if a lot of things are free, especially that first visit, and get some sound financial advice, and then start from there. My daughter always asks, what about investing? And my first thing to her is, first you got to learn how to save money. When you learn how to save money, then come to me and talk about investing. But you have to learn to save and be disciplined and listen to the financial professionals before you just kind of start going out there and investing. So we want to teach you to take look at your banker, get some real sound professional advice before you and learn how to save before you kind of jump off into that. And I'll turn it back over to Casey.
No, I think you hit everything spot on, Sylvia. It's really having that conversation. And I feel like taking control earlier on in the process. So, Sheena, you're mentioning building that wealth over time, have that conversation, make sure you're on the right track. Sylvia shared, it doesn't cost anything to go meet with a banker. So really having that conversation, put a plan into place earlier on, and go back and revisit that. If that means going back and visiting with your banker, or, the human resource contact at the employer you're working for, just have that continuous contact with them, and taking control of your own financial journey and your own path moving forward.
I know a lot of us on this call want to be like Sylvia and be able to own a home at 22 years old. Oh, dude, you want to roll it, or?
No. Keep going. I'm digging.
I was saying that everybody wants to be like Sylvia and be able to own a home at 22 years old. I'm a year out, being able to own a home. Look, I've hit 22, maybe 23, I'll be able to be a homeowner. But another question was, what financial planning systems would you recommend for somebody who wants to be a homeowner? What does that look like, in regards to planning and getting ready? What things that we should be looking out for if we would like to be homeowners in the, the next year when people turn 22, like Sylvia, and able to buy a home?
All right, I'll say something. So, you know, the number one thing when it comes to when you think about home ownership, it's really, are you ready for it? Is it something, is it a financial goal that you have? Okay. And if that is a financial goal, what is the timeline that you have set to reach that financial goal? So, for example, Sheena, if that's something that you want to do, you know, by what age do I want to have this property or home or townhouse or whatever it is? And then you put things in place that's going to get you there. So, for example, let's just say you want to buy a home, then you have to determine, you know, how much do I want to spend on that? And then how much of a down payment might I need, right? And so you start putting things in place, you know, you look at your credit score, you just start doing all those positive things that you need to do so that whenever that time comes, you're ready for it. But I would say just make sure that, you know, you put a plan in place. You know, you make sure that the credit is good. And that's one of the things that I say that would even be helpful now is to sit down with the banker. And when you talk about your financial goals, and you say one of those goals is to own a home by the age of 26, I'm just making it up. But then they can tell you how to get there, right? They can put a plan in place for you, and then you can try your best to follow that plan. And I will tell you, once you put something in writing and you start gaining traction, when you see your savings increasing, when you see your credit score increasing, it just makes you that much more motivated to try to continue to reach that goal even sooner. But back to Casey's SMART goals, you know, do the SMART goals and put something in place that's really going to get you there, and then stay focused and dedicated. And when Casey comes along and say, hey, let's go and do this, you say, nope, I'm saving because I have a goal and I want to reach it by this date. Anything you'd add, Casey?
The only thing I think it's always something to keep in mind when it comes to, you know, saving and planning for our home too, is keeping in mind once you reach that goal and you have that home that you're also buying within, keep in mind, it's not just buying the house, but it's also maintaining the house. So all of the work that comes along with it as far as the upkeep as well. So something to think about when you do go through that process that I don't know if was always top of mind as well.
Do I think we have time for one more question? For all great questions. Do we have time for just one more before I hand it over to Lynn? When it comes to start paying our credit cards off and things like that, when we're accumulating credit, when is the best time to pay off that credit card balance? Do we wait till the next closing day before the when Sylvia talked about the statement, when we're looking at our statement, do we do it before the statement releases, or do we set a date? When is the best time to go ahead and when we do accumulate credit, we start paying those credit cards off or paying the payments?
So honestly, you know, if you're using your credit card and you're making purchases, and so you know, I would just say, just keep it simple. You know, I mean, you're young, just keep it simple. When your bill is due, if it's due on the 15th, make sure that you pay it by that date, and make sure that you pay it in full. Because if you do not pay it in full, what I would encourage you to do is look at how much interest you're being charged and how much interest you're paying on that card. And that might motivate you to pay it in full, and only put on that card what you're able to pay in full. So that's really my advice, honestly, is just make sure that you pay your card in full by the due date. You don't have to try to get tricky, because when you try to do things and pay this, that, just pay the bill. You know, make sure you pay it by the date that it's due and pay it in full.
The only thing I would add, Sylvia, to what you were sharing, and it's exactly, you know, what I would say is consider making your payment automatically set it up. So to Sylvia's point, that you know that payment is going to be received by the bank, by that credit card company on time, every time. Because Sylvia talked earlier about the importance of, you know, maintaining your credit. And a big part of that, and the largest part, is going to be, do you pay your bills on time? So consider, if you do have a credit card and you are paying it off on the monthly basis, to ensure again that it's received on time every time, is setting up an automatic payment, if you will, so that you know that is happening.
That was great. I did say I know this one, like that was the last question. That the question came. That was really good. What books are there? Any books out there when it comes to personal finances that you guys have, read or seen, on Amazon? It takes a day for Amazon. Maybe I need to order it tomorrow. But what books would you recommend when it comes to your personal finances to get you prepared? When it comes to everything we talked about here today.
Casey, can you think of any books that you would recommend?
I'm trying to think, and it was one that I read like we're talking 20 years ago, and it was about retirement. But I don't remember the specific name. But nowadays I'm like, oh, well, a lot of that information I have received actually when I've gone and met with like my banker, if you will, or my retirement consultant, they share the same information. So a recent book, I don't have one to share, but I do think even just having an initial conversation, like Sylvia mentioned earlier, with a banker to ask some basic questions is oftentimes very helpful as well.
And I don't know, maybe Dewey has a book that he's read recently, but I mean, I would say, if you're interested in building your savings, then go to the library. I'm saving you money there, right? Go to the library or do something online that's free. Because what you don't want to do is pay a lot of money or even pay money to get advice that you can, listen to your banker, go to the library and just read. And that's really kind of what I did. And more for me, I follow different people that I like to listen to as far as their different type of financial advice. And there's a lot of different people out there. One of the books that I read that I thought was interesting, it was Warren Buffett and his biography. I thought that was a good one. There's a lot of beginning books on just basic savings of whatever it is that interests you. I would say, and read several books. Just don't read one person's opinion. Read several books, and then, talk to someone. And we had that question earlier about family and friends. You just want to make sure that you're talking to people that just has a lot of stuff, but that are making financial sense, that are disciplined, and that are making good financial decisions and not just things that you can see on the outside.
Well, Sheena, you got any more?
No, those are all the questions in the chat.
Okay.
I
Now,
learned something. Now I'm handing it over to you, Mr. Lynn. You can
well,
take
you
it
did
over.
a great job with that. And Dewey was a college baseball player. So he hit a lot of home runs, and sometimes the pitchers would groove one down the middle. And Sylvia and Casey, did y'all play softball ever? Or
I did.
Okay, you did. So you just missed that pitch that she grooved down the middle when she asked you about books, right? And
Yes,
look, that's a setup for both you all. I see a book, Sylvia Jones and Casey Galindo's new book coming out on the market about, managing money, budgeting in today's global economy. A New York Times bestseller. I see a show, I see a movie, and all this. This trifecta of expertise from Wells Fargo has done a wonderful job. Now, I got a few more questions, okay? Because I know we got a few more minutes left before we toss this thing back over to Dewey. First one, best way to establish yourself financially early on. What's the best way to do it?
I'm kicking it to you, Casey, or do you want me to?
No, I can definitely, and I would say, starting off budgeting, everything revolves around budgeting, the financial decisions that you're going to make, being able to save money, to pay off debt, to start building that wealth. It's going to come from having that foundation and really understanding your budget, what money you have coming in, what money is going out to pay expenses, what do you have left over at the end of the month is going to, influence a lot of those decisions. So I would say having that solid foundation and really having a budget can help set you up for that success in the future.
All right. Now, here's a big question. We are inundated with creative advertisement that tells us that you got to buy this stuff right now. Oh, if you don't buy it, you're not going to be cool. You're going to lose the best opportunity of your life. How do you overcome the need to spend all of your money and how to manage multiple savings accounts. Because let's say the college students who are there right now, you've got some experts in the dormitory right now in the residence halls who've been in college maybe 7, 8, 9 years, who have and who have that knack of telling folks how to do things a certain way. How do you navigate that by, overcoming the need to spend your money on everything? And then how do you manage multiple savings accounts? Or do you need to have multiple savings accounts?
So I'll jump in on this one. So the first thing is I would probably challenge the fact that you would need multiple savings accounts in college. My thing, especially when you're in college, really is to keep it simple. Okay, you do not have to have a lot of savings accounts that you're trying to manage. You want to look at the savings account that's earning you the most interest, and that's where you put your money. Okay, because chances are they're probably paying you something different. So find the one that's working for you, that's paying you the most, and put your money there and keep it simple. As far as figuring out, and I apologize for this sun in Georgia, but as far as really looking at when you think about, spending everything you have, right? It's a matter of just being disciplined. And like I said, if you're spending everything you have, your money is working for an investor. Your money is working for someone else. It's not working for you because you don't have anything at the end of the day. If you're doing that now as a college student, you may be one of those students that are living or professionals that live paycheck to paycheck. That's something that you don't want to do. You want to, I always say you want to kind of learn in college and make those mistakes when you're making a little bit of money so that when you are making those big dollars like Dewey, you are not making mistakes. and Lynn, he's just off the chart, so we're not even going to compare ourselves to him. But yeah, you want to learn while you're in college. That's all part of it. And don't be that person that spends everything that you have, because like I said, if you do, your money is working for everyone else and not you.
Great point. Great point. You want to say anything about that, Casey? Anything?
No, I would agree with Sylvia.
Okay.
Absolutely, 100%.
Here's another great question. We know about income to debt ratios and stuff like that, but this question says, what is the ratio of our income that we should be allocating towards things like housing, vehicles, and food? So how do you divide that up? If you're sitting there saying, okay, I'm going to put a cap on what I spend on these things, what's the ratios? Is there a summary of a formula for that?
Yes, and I will let Casey share that.
Okay.
And probably something that most students have probably heard of, or maybe it's something family or friends currently practice, is I know it's very common for them to say like a 50-30-20 rule. And by that, meaning specifically like 50% is going to go towards those needs that you have. So needs like food, utilities, things like that. And then you're going to have the 30% that's going to be more of those wants that you have, the nice to have. And then 20% would be savings. So oftentimes you'll hear that 50-30-20 rule when it comes to your money and kind of what portions should be going where. But then there's other things that you'll find that they'll say X amount should be going to utilities and food, and they get more specific. But overall, many often follow that 50-30-20 rule, which 50% is going again to those needs, 30% is going to the wants, and 20% to that savings.
Okay. All right. We've got about 10 minutes left before we're going to toss this thing back over. So for those of you who are athletes and really tune into sports, we're in the fourth quarter right now. Okay. We're in the money quarter. Well, you got to just win it or, you got to or lose it. And so now we're down to crunch time. How do you recommend someone saving or organizing their finances in terms of short-term debt, long-term debt, retirement, and savings? Now, these are some young folks asking some real good questions, aren't they?
They really are. Yes, these are great questions, and what I'll say too is that listen to all of this, write down some great notes. Casey just talked about the 50-30-20 rule, and then the most important thing, just like a student athlete, you have to implement right?
Yeah.
You have to implement what we talked about. You have to, when you get on the field, when you get on the court, you have to make it happen. And so otherwise, you're just kind of listening, right? So we want to make this happen. But when it comes to all of those things, the bottom line is you do have to have a plan, and you have to stay focused, and you have to stick with that plan from start to the end. And it does get a little kind of tricky or cumbersome when I have to pay off debt. I want to save. I want to invest in my 401k. I want to go out and have fun. You just have to prioritize. You have to set those financial goals. And then you have to, when you prioritize what's important to you, but then you have to do those really specific things, like you want to, if you're in your career, you want to invest in your 401k, you want to save, and maybe you do all of those things up front, and then what you have left over is what you have. That's kind of your disposable income, what you have to play with. Okay, but you have to have a plan. You really do have to stay focused in order to do that, just like being a student athlete.
That's easier said than done, though, right? I mean, you really have to mature. You got to mature, and you got to make sacrifices. And if you're going to be a Division I student athlete or a student athlete at any level, you're going to have to make sacrifices, to win. And that investment in terms of time and resources will reap some benefits down the road for you. Here's another question. Is it wise for a student to lease a vehicle as opposed to purchasing one? I don't know. Dewey, what about that?
Lynn, you're asking $1 million question here, and I did an essay on this way back in the day, and I would say, and I'm not the financial expert around these people, but for me, I just could not see the value in leasing personally. I would rather own it or be able to kind of sell it on my terms versus a lease, where, hey, the minute you go over 10,000 or 12,000 miles, you're getting dinged $5, whatever the amount is, right? Yeah. So for me, I was a big fan just of purchasing outright. I will defer again to Casey and Sylvia for their thoughts.
Well, I would say I'm not the expert, but my choice would be the same as Dewey. I heard once someone said, leasing is basically, a long-term rental, right?
Yes.
That you have to turn in. And so it sometimes it seems attractive because it's like a lower upfront, payment. But you got to think about, can I really afford this? Why am I leasing the car? Why am I not buying it? So you really do have to think about that. But personally, I like buying it, owning it, and when I'm ready to sell it, I'll sell it on my own terms.
Okay. All right. Here's something you touched on earlier, and I think you, in your own personal story, you talked about this, about being able to handle or invest in real estate after college life, while you did it during college, basically, and or while you're currently working a job.
So for me, I was done. I graduated, but I will tell you, you said a minute ago, you talked about debt to income ratio, Lynn. So when I, right after college, I was ready to go, right, and do this. And so I did go to see what I'd qualify for. And they told me, well, your debt to income ratio is a little bit high. So I didn't even know that was a thing. I knew I had a high credit score. I knew I had a good income, but I didn't know about the debt to income. And so I had to go and make some adjustments. Otherwise, they weren't going to lend me the money that I wanted for the house that I wanted. So I went and I quickly made some adjustments and then went out and did that. But you do have to be ready for it, to Casey's point, because it's, the mortgage or the what you pay monthly is one thing. There's maintenance, there's insurance, there's a lot of other things that come with that. But once you're ready, it's a great way to start building your wealth.
Okay, we at the 5-minute mark now. We got 5 minutes before we turn this ship back over to the real captain. But here's another question.
Only because I'm sitting in Lynn's chair. Only because I'm sitting in Lynn's chair. That's the reason.
But you look great and you're doing a great job, man. But what about this? Post-pandemic, from your standpoint, passive income and things like that, have you seen a significant change in the increased opportunities for young people like the ones on this webinar to really make passive income gains? And does are there some dangers there? Or what would you do if you were advising your daughter or a classroom of students on how to maneuver now post-pandemic?
I'm going to kick this to my friend because she's done some things during the pandemic and post-pandemic in regards to, you know, making some income. Go ahead, Case, tell them about it.
And Sheena, I know Sheena is listening, because she's trying to earn some post-pandemic passive income.
Well, and it was one that I would have never thought of in the past. And I know Sylvia's probably tired of hearing me like, this is great. I love doing this. And it was something that was so easy and simple, is reselling on consignment. And, during the pandemic, let's just say we all had a lot of time. I know I found myself doing a lot of, around the house type jobs, cleaning out closets, things like that. And it was amazing how much I have been able to resell on consignment and how much you can make by just, even like, for example, there are stores here in San Antonio where you can take clothing and they can purchase right there on the spot. And it's a great feeling to be able to say, you know what, I'm cleaning out items I no longer use. And I'm able to make income very easily. Something I can just go drop off, they review, they go back, they, sometimes purchase items, sometimes they don't. I can sell the rest online through online consignment. But that has been one thing that's been very easy, doesn't take a lot of time to do, especially, being student athletes, graduate school, wherever you are, that might be something that's can wind up being some extra income on the side. So I've cleared out books, I've cleared out things I have found in storage, like old CDs, clothing, items like that. So that's been a great way to make a little bit extra money.
Great point. Great point. We've got 2 minutes. We're at the 2-minute warning right now. Okay. One big question for any one of you three. A lot of college students now that I interact with said that they want to become influencers and want to make money on social media and want to be content creators. How can you monetize that? And have you run into that with some of the young people that you've been working with? And is that something that you're seeing in your industry that, is very prevalent, or what? And how do you manage that? Anybody got any ideas about that?
Who wants to jump in on that one? Dewey, do you have any thoughts on influencers?
I'm happy to start on it. And this is not from personal experience, but knowing some folks that have kind of ventured here. I think you have to define your niche, Lynn.
Yeah.
So you determine the thing that you are a subject matter expert on, and you talk about it with passion and in a way that will engage others. And you may start with 5 followers, and you may get 10, and you may get to 15, and then be at 50. I think that's the way that you kind of start the process. Find something that you're passionate about, speak the truth about it in a way that's going to resonate with others. That's going to give you a chance to kind of grow and develop.
I think that's a great answer. And I think all three of you have given us great advice, great information. And Sylvia, thank you. Casey, big ups to you. Dewey, we're turning it over to you back in the studio. Take us home.
Back in the studios in the MEAC Digital Network. Did I say it correctly?
You got it right.
Listen, count me in for coming back here at any time. Lynn, certainly want to salute you, salute Sheena for amazing information. Casey, Sylvia, great stuff that you all shared. For our scholars that are still on with us, make sure that you send a follow-up note to these folks. Share the playback, obviously, when it comes out as well with others that may be able to benefit from the content that we've been able to share here for today. So let's give it up for our amazing panelists and for our amazing Q&A and for our halfway decent moderator. Decent moderator. Listen, we got 3 minutes, so we're gonna cover it off to get everybody on to the rest of the night and into the weekend a little bit earlier. Our Beyond College webinar series is running. We're really excited that the series will continue here from a monthly basis between now and November. So we've covered off on got 1 in the can, y'all. We got 11 more to go. So you see our other topics around mentors and sponsors and The focus on March is going to be connecting into resume writing and interviewing skills and discussing graduate school. I think we're going to have Casey back for that session with us in April. We're going to talk about the gig economy. Lynn touched on it. What are some steps that you all need to be thinking about if you're considering hanging your own shingle or starting to influence in some way, shape, or form in the gig space? Securing the bag. This is going to be a real one. And so you're going to have to stand by for some additional details on how we're going to break out that topic. But we're going to really be touching on elder fraud prevention and making sure that you're protecting your resources as well as your family's resources. We get to the middle of the year, biggest webinar of the year. I would love for us to have 1,500 people on this webinar in July. And that's not a stretch. I'd love to have that many registrations as we talk about career pathways. We had someone that asked about career opportunities. I would encourage everyone that's interested in career opportunities with our firm to visit the Wells Fargo Jobs website. You can take a look there at full-time opportunities and also opportunities that are available from an internship perspective. August, we're going to talk a little bit about success strategies for college, specifically around paying. Media's favorite topics of the year will be coming in September. We're going to get you cyber ready and make sure you're maintaining your safety in the speed you need to. October, Get Smart About Credit Month. We're going to unbox the credit. We're going to talk about credit matters that matter. And then we're going to end the year with our good buddy, Juana K. Brady, talking about home ownership and a pathway there. Those that are maybe thinking about home, there's a great resource that's available now. Some homework for you. Just do a fast Google search for Wells Fargo down payment assistance. You're actually going to see a number of markets right now where the firm is providing up to $10,000 of financial assistance to be able to put a down payment on homes, on a home that you get. So take a look at that. Hey, last but not least, some resources to kind of keep us moving with things. Talent community, we touched on that a little bit earlier. Super important to make sure you're looking at career opportunities, whether it's an internship, whether it's a full-time role. Scan this QR code. It's going to take you over the page where you can go ahead and get those applications submitted. Two of the QR codes are on the right-hand side. The first one, maybe you have a financial question that's come up for you. I feel confident that you should be able to go to someone that can answer that question for you. You can actually scan the QR code that's here. It'll take you over to the web page, and then in turn, you can actually set up an appointment with a Wells Fargo banker to be able to get those questions answered. Maybe they're in your local market or in your region. You can get connected in simply by scanning that QR code. And then last but not least, so much discussion around finance and building that nest egg for the future and getting a start with investing, right? There's a great tool that's called LifeSync. This is available to all of our retail banking, all of our banking customers, now almost 70 million globally, can access this resource. Jump out to the page. I think this is a news story that actually spotlights the LifeSync product suite. And so you can learn more about the resources that are available there as you start your investing journey. I want to, again, remind everyone here of the last item, and it's our survey. We want to make sure, as a follow-up to today, you're going to get a survey link where you'll have the ability to give us feedback. We're very, very interested in continuing to make these broadcasts dynamic and getting you information in a way that's going to be especially helpful. So take 2 minutes, complete that survey, give us your feedback, and help us continue to build as we make this series even more amazing for the remainder of the year. My closing thought is going to be to thank you all for coming in and joining. We had almost 400 registrations at kickoff. Almost 400 was our number. And so that's a really great start for the year. And I just anticipate that things will grow in the days ahead. So as a reminder, be sure to join us on February the 22nd for our next discussion. It's going to be about mentors and sponsors in your personal brand and some things that you'll need to be able to engage through in those kinds of areas. I want to thank the entire MEAC team for an amazing broadcast. Thanks for allowing me to come down and be a part of the MEAC digital network, sit in Lynn's chair. And it's got a massager on the back too. So y'all have to come here and try this on your own. It's really been great to have this partnership and to engage with the MEAC team. Certainly to our panelists, just thank you all for the amazing information that you all share. And let's just continue to build strong financial futures and continue to win in the days ahead. With that said, everyone have a wonderful rest of your day. We're signing off from Norfolk, but we'll look forward to seeing you next month for mentors and sponsors and your personal brand. Good night, everybody. Till next time.